Good morning, everybody. How are you guys doing today? Thank you, Max, Nicole, Brett, for becoming Cornishons. I appreciate it.
Welcome to Cornichon.
How's everyone doing on this fine Sunday? What's up? What do you think about the theory about reversion conversion strategy? Seems legit with the dumps, with the dooms. No. Yeah, it does. I agree that there's a way for them to at least facilitate that, especially given the recent options flow and the very odd options flow that we saw on Friday. He's late, but he has T plus 2 plus 35 to start this stream. Thank you, David. I'm doing good. I'm hanging in there. I guess the first thing I want to address on the stream before we get into things that are important is my banning from Superstonk. I do not agree that their decision was in the best interest of the subreddit, and I do not agree that their decision was fair or equitable. JSmar had already reached out to me and said that he was going to speak with me this weekend, and instead of doing so, went forward with a ban for brigading or not having maintained control of the 11,000 people in my Discord to a degree which they were satisfied with. Although at no point had they defined how they wanted me to maintain control of that community, nor did they maintain control of their own Discord, which is flooded with comments from the moderators and vitriol towards our community and towards DD writers. They have done nothing to stop the blatant and flagrant abuse of Rule 1 of the sub. They have allowed everybody in this community and all of the DD writers to be continuously abused, threatened, and harassed on their platform, and then have now chosen to silence them instead of addressing it. I will continue to post DD and inform this community the best of my ability, and I hope they reconsider their decision, because I think it was unfair. And until that point, I'm not quitting. So that's all. Then I'd like to discuss the timing of the ban. A lot of people miss this, and I don't think everybody was super well informed. Maybe it was complicated the way I explained it. But in my last DD, Wiking off for OPEX, or one of my last DDs, I explained a system in which short hedge funds or authorized participants continue to synthetically short GameStop by committing fraud through ETFs and on GameStop itself or the underlying stocks in those ETFs. I showed a system in which they can create nigh infinite liquidity and drive volatility on the underlying. The driving of this volatility is something that Citadel themselves greatly profits off of, and in my opinion is the first real evidence of any crime being committed on GameStop that is provable. And it is crime. It's essentially a bust out scam at its essence, except far more complicated. And that was met with a ban. So it does bring into question the motives behind that. And I think they should be questioned by everyone. Superstonk was supposed to always be a place for fair conversation and education, for shareholders of GameStop, and it has ceased to be that. And so I will be posting from now on in our Dillionaires and Friends with Financial Benefits think tank on Reddit. I will continue to be streaming here every day, 9 to 4, and on weekends. And for those of you that have stayed, I thank you. And remember that even though I am silenced, you can still be heard. So do not let misinformation spread throughout your community. Fight back. Be loud. Stand up. That's it. All right, on to shit that's important. So what happened last week? Well, someone failed to cover their obligation, and someone's carrying a big fat fucking bag. I don't know who. I don't know why they were allowed to. They literally changed the rules on Thursday. The reduced risk in variance swaps, which I just discussed, is going to present some interesting changes going ahead. These cycles may not be realized to the same degree or to the same extent, or it's possible that the person perpetuating these cycles has been cut loose and let adrift as the rest of NSCC and OCC members scramble to protect themselves. Discord, please. Sorry, driving, can only listen. Sorry. Forgot to do that. I don't usually do the Discord on the weekends, so there you go. Sorry about that, guys. If you missed the first part of the stream, you have to watch it later. So because OPEC's obligations were not covered, and Turd has found some evidence of T+7 for these failed obligations. It does look like something's going to go down this week, one way or the other. Either tomorrow or the FTD dump that's on Tuesday, or throughout this week. As we move closer to the futures rollover, there may be price action from that as well. If crime, then how MOAS? Good question. Well, because not everyone wants to participate in it, Stefan. While there may be some entities that are working together in order to harvest volatility on GameStop, that doesn't mean that everyone is complicit. We have pretty good evidence that, you know, BlackRock and Vanguard ETFs do not participate to the same degree in this not illegal, but immoral share creation, whereas XRT has no problem participating. Thank you, Ross, new subscriber. You definitely don't know me. Jared White, appreciate it, man. And so, yeah, I assume that while DRS, I do think was an organic push from the community to empower their shareholder rights, I also think that there is an opportunity there for these same entities to use DRS to their benefit in order to drive more illiquidity, more volatility, and thus more profits into their own pockets. If the original short position is in fact packed into total return swaps and not being reported, then, you know, after last February, we had a bunch of short hedge funds looking at a stock with a massive amount of ownership. And as hedge funds are wont to do, they found ways to take advantage of that. Bithead, thank you so much for becoming a pigeon whale. I appreciate it, man. Jared White, thanks for coming to Corner Show, man.
It's a
Are all welcome on the Dillionaire sub or just actual Dillionaires? Just actual Dillionaires. Like in the private Discord, it's just Dillionaires. The rest of the Discord, everyone is completely public. And the private Discord's mostly all about other stocks and technical analysis and things like that. Grease nipples. One sec, man. Because you got censored. Oh, no, you just didn't say anything. Thank you, man. I appreciate it. Just got, oh, total fucking BS. I agree. And cowardly. Not even a last post or reaching out to me. Can you please draw a pic on how this alleged crime would work if it's true? Please explain as simple as humanly possible so people can understand the concept. Okay. I can do that. So you have authorized participants. Hold on, let me do this in a way. Give me 1 second. Let me. Oh. All right. So you have the authorized participants, and they go to the ETF. And the ETF then creates them shares of GameStop, which they sell. This then drops the price of GME. But not through a true short sale, right? This is a sale of synthetic stock. Not a short sale. It's not counted in GME's daily short volume or short sale volume. It is simply a sale. It's unaffected by things like SSR and also unaffected by reg show thresholding. But what does happen in this process is the ETF is then negative the number of shares borrowed here. So let's say 50,000 is a fairly common number for a creation basket. Now, of course, these shares are synthetic, so they're going to FTD. And that's that T+6 ETF FTD. And so at this point, the ETF will then go and get forwards or return swaps for this amount of shares. So they need to have a long forward position of plus 50,000 shares of GameStop, right? And what that does is that gives them a NAV neutral position, right? So 50,000 shares borrowed, ownership for 50,000 shares, even, right? On the AP side of this, these FTDs need to be marked long. And so they sell in the money puts to mark this position long and give themselves an additional 35 calendar days. Now, when these forwards are purchased, the price of GameStop is already dropped, right? Because the AP has already sold those shares. And so the spot price for this forward contract is cheaper than when the 50,000 shares were created. I know it's a lot. Try to follow along with me, and then I'll answer the questions. Now, when these FTDs come due on the T+6 plus 35 day, these in the money puts are exercised or closed. The cash is then taken from them and given to the ETF to cash settle these failures. The ETF then receives this cash, closes their forward contracts, and accepts delivery, and the counterparty goes out into the market and buys 50,000 shares of GameStop. Also at a cheaper price, right? Because GameStop has continued to be shorted through this entire period. And so what this does essentially is it creates an infinite short mechanism for GameStop. The only cap on the amount they can short is the amount contained in the ETF per day. And then they can do this over an entire quarter while they stack up these obligations. Once they move into this OPEX period, which is where they clear these obligations out, and those forward contracts are closed, those puts are closed, all of those obligations come due. And during this time period, the price and IV30 of GameStop go way up. So price and IV. And this is where we get into the short volatility, long volatility, and entropy swaps. And so what they can do is the entities that are short volatility, that use this ETF mechanism to continually short, can enter an entropy swap, which hedges them against the increase in price and IV. And so price rockets while their volatility position remains neutral. And then they can close that entropy swap at the top and ride the decrease in volatility all the way back down. The long volatility positions are encouraged to buy the other side of this entropy swap and profit off of the increase in gamma or delta value over the rise in price. And the entropy swap also, or the long volatility positions will also make money on the IV coming up during this period. And so essentially they can profit on the up and down and up and down of the stock while they continue to short sell it through ETFs. And you ask, who would want to counterparty the ETFs on these forward positions? Well, why not the entities that are massively short GameStop, who are more than willing to buy shares to continue to fund this process? And I think that's how they, over time, close their long short position, is by selling the long position, or selling the long side of their short position to these ETFs. Good. Did everyone get that? The only thing that's changed in that strategy, Big Dilly style, is that I have, I'm still holding my March 18s because I still think that there are obligations that need to be settled. On Friday, you said margin call might have occurred. What's your opinion now? I still think it's possible, but it's hard to tell. There's no way to know unless, you know, it leaks or a news source picks it up. That would mean that they're going to let that entity be liquidated and protect themselves moving forward if the rule change was in fact an effort to off-risk other participant numbers, which the speed at which it was approved and the date on which it was changed indicate is a strong possibility. Some people can help but to be bullies behind the computer screens. Your information will be missed on Superstonk. Therefore, you'll have more of an audience right here. Pickle for life. Thank you so much. I have the power. You've helped so many of us understand the workings of the market. Don't just... Oh, I'm not discouraged. Don't worry. If anything, my resolve is steeled. Any word on delta sensitivity on Friday? Not yet. I still have to speak with Yelia. As soon as I do, I will post something in the Discord. Remember, if you guys aren't part of the Discord, at least join up for announcements. I do post a lot of things there. Or check follow my Twitter. I'll try to use it more actively going forward. Maybe. I really don't like Twitter. If this is a normal default, the OCC should close GEX and then bill against their liquidity account. Why would there be a delay of 15 days or more? If it's total liquidation, FINRA allows for them to have 15 days. We saw that with Archegos. Archegos was given maybe an even longer window than that. Dig into the GARC modeling with illiquidity and volatility increasing. Is it worth my time studying here, or am I going down the wrong hole? I mean, I think a lot of the volatility trading that's being done on GameStop, you can find through Zinco's DDs. If you don't want to go too deep into the complex derivatives, he has done a lot of that legwork already for people. It's not that DRS is having an unintended well, yeah, I guess there is an unintended consequence to DRS. But I don't think that people understand what that is or why that is. But the more shares DRS and the more illiquid the float, the cheaper it is for them to profit on their volatility models. Because they are able to drive more and more volatility in the stock, it benefits them more and more to be long volatility. And we already see that, you know, with these days where we used to get a crush in IV, and that might be the most realized effect of DRS, is this increased day-to-day volatility that GameStop has, as our bid-ask spread is actually finally starting to widen. So I would say that we're probably around 10 or 11% DRS at this point. And it is having an effect above just buy and hold, which means there is share lending going on, but there will always be share lending from the DTCC. Shares are not serialized. As long as the DTCC has shares on their ledger, there will be shares available to borrow. And as far as the ETFs are concerned, they don't even look for a locate, which I outlined specifically in that SEC document that I shared in that DD. And if you guys were watching, that I read out loud to Koala Hugger. So the fail was in fact intentional. Could you expand upon the statement you touched on about a member being set adrift? I mean, if the other participant members in the OCC are de-risking themselves, and the NSCC, by changing these risk management requirements, that means that somebody has failed, right? That's usually when you see these rules come in, is somebody fucked up and they're making sure nobody ever does it again. And so that rule change is to protect the current participant members and to kind of cut off the disease, if you will. And last year we saw rules being, you know, talked about and discussed, and, you know, in open commentary forums for months on end, but we didn't really see anything get enacted like this. And on the exact day that we expect GameStop to run, all of a sudden 2 rules come into effect and are immediately enforced. I mean, it's very telling. So what part of that process is the illegal part? The defrauding of shareholders in the ETF and the underlying stocks of fair realized value in their stock. It's essentially washing or money laundering, if you will. I've told you guys for months and months there was no evidence of crime, but this is crime. No, the dupes are the hedge for the volatility positions. And while they may create FTDs in large numbers, they don't really affect the price of the stock. They're so far out of the money, they have no delta value. There's almost no given hedge. One. What's the time frame on price action from a margin call? It's kind of an unknown. It could be immediate. See, they get a delay, but their counterparty can still force closure at any time. So essentially, after the margin call occurs, everything's in the hands of the counterparty. The counterparty will decide how to manage the situation in a way that's best for them. It does have to be managed within about 15 days per FINRA, but the counterparty can start liquidating sooner. And so it puts the defaulting party at a great deal of risk, because all of a sudden now, your bank essentially has control of your assets. Is this a slow process or aggressive process to close out positions? It can be both, depending on how the counterparty wants to manage it. Usually fairly aggressive. They sell off long positions and then buy up short positions. No, by doing this, they're creating FTDs in ETFs and replacing GME shares, GME FTDs with ETF FTDs. And so it's a way to launder the shorts through ETFs. So it allows them to take these real GME short positions, push them through these ETFs, and then the ETFs buy them back. The fail then exists on the ETF, where it can then be cleared through CNS and gotten rid of forever, unless somebody shut this entire process down and investigated it. And it would take quite some time. A catalyst could cause MOAS first, and so could FOMO. As long as they continue to do this, they remain at risk. The process which I described with retail buying options remains the best way to expose their risk on this position. Do you think they're going to succeed in getting out of their short positions eventually, or will a catalyst and FOMO cause MOAS first? Yeah, so I kind of answered that. So if we need big bounties in the financial system, sounds like they hacked the system, or at least found systemic vulnerabilities. Yeah. If margin call can the pull that no liquidity BS and drag it out 35 days? Possibly, but I doubt it. GameStop has sufficient liquidity, obviously, for them to cover. You really need really low rolling average volume in order to make a claim for no liquidity. like sub 50,000 volume a day. How do we know Dillionaires won't ban you? We actually don't. I don't even know who owns the sub, frankly. Like the guy who started it, I don't know if he even watches the stream anymore or who it is. I used to have messages from him, but I can't remember. Like I can't tie the Discord and Reddit names together. Thanks again, Girk. You've been a teacher to many of us here, educating us and helping more and more people find interest in finance, stocks, food, etc. Much love, bud. Thanks, Northern Cowboy. Jan 6, after hours run up, suspected to be caused by a large exercise of puts. When puts are exercised, the contract owners sell, but doesn't the MM also sell the remainder of the delta? What caused the buy? It's possible that when they exercise those puts, they wanted to sell shares at that price, and so they bought shares. Remember that put exercise gives you the right to put those shares onto the contract writer, and so you can just buy shares before you exercise your put, and then force the contract writer to sell those shares at a higher price or pay you the cash difference, right? How can we profit from here? Asking for the last 1K of the 90K I started in November. Trading my stock is all I will have left soon. As long as these volatility cycles persist, there's money to be made in them quarterly. Obviously, if this is a margin call, this may be the last one. Advantage can be taken very easily of GameStop's high IV and high theta cost in the selling of contracts, whether it be covered calls or cash secured puts, and can quickly refill your powder through safe covered call strategies. You must be doing something right if you got banned from SS. Congrats. Does this mean the end is nigh? I appreciate your vigilance and continued daily streams and posts to help us poors. Thanks, Nostradamus. I don't know if it means the end is nigh, but something's up. A failed margin call is timeline that follows set in stone liquidation, or is it another few weeks wherein the offender can try to balance the books? It depends on their relationship with the defaulted counterparty. I mean, just like, if you don't pay your mortgage, your bank can give you 30 days, to set things right. This can also, happen in the stock market as well, although the time frames are generally much shorter. If the entire position is offset using the method described, it's just a debt against someone's leverage. Would this lead to Jamie price improvement over time, causing a Tesla squeeze? Yes. Provided the position started to be closed out. Not necessarily a Tesla squeeze, but maybe just a squeeze. Don't forget that Tesla's big run up happened all at once, but the Tesla squeeze kept occurring because shorts kept piling in. So when you compare GameStop to Tesla, it's not really the same. Like Tesla would go up, people thought it was overvalued, they would short it again, it would burn the shorts and go up, and on and on and on. And they still do this on Tesla. They still short it because they think it's overvalued. And the money is there to be made for the short positions, right? I mean, like if you look at Tesla's most recent run to 1200, if you shorted at 1200 and bought back when the stock hit 730, the profits are immense. And so as long as Tesla remains volatile and heavily traded, and its valuation uncertain, then short positions will continue to pile into it, and it will continue to quote unquote squeeze, even though that's really not what's going on. Previously, you said the SEC are aware of this. Would mass tips reporting help force some action, or at least prevent the SEC denying any knowledge? Possibly. I mean, the information about these systems is in their own internal documents. So what means the Citadel article that you sent to everyone? Citadel makes their money on volatility. It's one of their primary avenues of interest, even though they're a multi-strategy fund and several of their smaller funds that they own pursue various strategies across the market. They make a lot of fucking money off of volatility, and not just the VIX. They make it on variance swaps across small baskets of stocks, across ETFs. They profit off of volatility. It's what they do. They trade it. And so a illiquid and volatile market is very good for them. They are well positioned for the current market conditions, to say the least. So Citadel, the market maker, not big on the shorting thing. They're not big into doing big shorts. That's more of a Melvin thing. And understanding that is important. Understanding why they gave Melvin money, because they needed a counterparty, didn't they? And now that they've pulled that money back from Melvin, there's bigger questions that need to be answered. I would say that somebody has failed to cover the obligations due for OPEX. We still see XRT on threshold. It has not been removed. We know that the put OI, on February 18th, we saw put OI go from 3 to 1 put to call to 1 to 3 put to call. And that obligation has not been satisfied as of yet. Can GME restrict or request that their stock not allowed to be included in ETFs? No. It is up to the owners of the stock. GME, as a public company, GME does not have any control over its own stock. They can split it, they can buy it back, they can make more of it, but they cannot recall it or prevent its usage in any way. No, you guys have been telling me for months and months that things were crime that weren't. I'm telling you, this is something that is. Just a big thank you for holding your ground and not selling out to push their agenda. It's their loss in the long run. Thank you, WAP with a V. So do you think they're unwinding their short position in this way? Yeah, because they would never carry these levels of risk otherwise, right? No fund in the world is going to stay holding a massive risky position on their books. They're going to get out of it as quickly as they can. And with people holding, it's difficult for them to get out of it quickly, and so it's taken a lot of time. And it's possible that in the long run we still beat them at their own game simply by holding the stock. But they have found a ways to take advantage of the holding of that stock, as hedge funds seek to do. They do seek to profit off of whatever conditions are presented to them. And GameStop is a very unusual condition, and it presents opportunity for large profits, right? What are the new rules? They're posted in the Discord, in the announcements channel. I posted them the day they came out. It's NSCC 001 and OCC 001. And OCC's rule change specifically affecting variance swaps only further confirms what I suspected previously. Do you think this is being investigated currently? It could be what the DOJ is investigating, yes. the announcements of those investigations line up a lot with people starting to talk about this process. Thoughts on if the doc will have any effect? I don't know. Little Beefs, thanks for becoming a Cornishon, man. You too, Fluffy. If MMs are supposed to be neutral anyway, what legitimate reasoning is there to support MMs being excused from the upcoming proposed short reporting rules? I don't know how strict those rules are going to be. I don't know if it's just another 13F where, you know, it's not enforced, but it could change things. It may not. We'll have to see the effect on reporting that these new rules have. Could we estimate that this crime included in the investigation with the SEC DOJ? Possible. We don't know. I mean, unless they tell us. It's an active investigation, right? So we're not going to get any information. I think Girk exposed a cycle where they were trying to fix their crime, and now they did more crime because Girk exposed their cycles. Or they just failed because they were exposed. I mean, if counterparties were aware of this, they would shut it the fuck down, right? This is open to everyone. Chat's restricted because obviously, like, I want to make sure that members get all their questions in for the weekend. But if anybody has really important questions for me, you can DM me on the Discord and I'll try to get to you later today. If you're not a member, don't worry about becoming one. If they're being investigated by the DOJ, does that help us at all? Or will that kind of investigation take too long to make a difference? It would probably take a very long time to unwind all of this. It wouldn't make a difference in the near term. Do you think that Citadel being able to profit off of the volatility will eventually get to a point where they can exit their short positions? I'm assuming that they do not want to stay short. I mean, we don't know if Citadel is in fact short, right? Citadel is likely long volatility. I saw a DD yesterday saying that 3/1/22 is the day where we run this time. It's possible. Yeah, there's a lot of FTDs due on 3/1. People are assigning that to the Dooms, but really what it is FTDs from January leaps, not just the deep out of the money puts, but all of the January leaps. And yeah, they're due on the 1st. So the correlation is there. This is the underlying mechanism seems to be misunderstood by the DD writers. Only FTDs have a Reg T addendum, right? So only FTDs can be extended for 35 calendar days. The obligations due from OPEX are due in T+2. They are gamma exposure. They are a market maker obligation. There is no additional time frame for them to settle that. Sorry if you guys, does this at all change your position on the potential for a longer term halt on GME? I mean, it could happen. If the SEC believes that there's fraud, they can freeze the stock. Thanks, D's Nuts. Katmari and Kyle Griffith, thank you so much for becoming members. Kyle, hit me up on the Discord and I'll get you added to the Dillionaires Country Club after the stream. I appreciate the support, man.
birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we holding the float. If you are what you eat, that makes Gert in the go. Hoping that you read the DD, cause when the shit squeeze, we go.
If no one is willing to take the entropy swap, does the process break? Or they just lose money when the price goes up? I would imagine that the process would break as the amount of risk taken would exceed their margin requirements, which also makes the OCC relaxed margin requirements rule interesting, right? As we see this attempt to avoid running the price of the stock and then a change to the requirements for margin for running the stock. Regardless of effectiveness, doesn't the fact that MMs want to be excused from reporting shorts indicate that they aren't always neutral? Yeah, it does. I mean, they should be neutral. That's what they're trusted with. That's why they have so many exemptions to reg show reporting. But yeah, I mean, obviously they don't want to report nobody wants to report their actual positions, right? Except long funds, because they just don't care. But yeah, short hedge funds or dynamic funds, they don't want to report what they're doing, right? Because it would just be a big tell, and then people could move against them. Look at Herbalife, right? That's a good example of what happens when you tell the world about your short. Sorry if you already answered. This is possible if Feb 18 exposure has to be covered under T plus 2 plus 35. No. There is no Reg T for market maker gamma exposure. It simply must be covered. If they cover it in a way that creates failures, sure, but it still has to be covered. Could you please write some possibles on the chart? Might be good for everyone to see. 1, they failed because of margin call. 2, they failed and GME reg show. 3, we failed. I would say 1, risk was reduced. To protect counterparties at risk of failing. Two, someone failed and rules were changed to protect other members. Three, rules were established to prevent a repeat of last January. Four, I would say this is the least likely. I'll let you guys read that for a second. Have you glanced at March 1st Hopium thread in the DD discussion Discord channel? Not yet. I've been busy digging into these rule changes and looking for precedents of same day rule changes in the event of market instability. I have the opinion that your options DD exerted pressure on the short hedge funds and made them change their strategy. You indirectly doodled on the chart. Thoughts? Yeah, I think it did. I think retail, well, we established that the risk in this position was, so at the top of, let me try to break this down. At the top of each of these peaks in price action, they flip their position and go short, right? And the idea is by shorting up here, when they've driven the price down below the floor of the previous run up, it's very profitable, right? But with retail buying far dated calls, when they go to flip that position, they then have to fight back against that positive delta hedge from the market makers. And this means that it may be impossible for them to push the price of the stock back down. And even more so that they could enter this large short position, expecting a downside, only to have it hedged against them, blowing up the short position they put in place. And so, yes, I think their obvious fear of delta sensitivity spikes indicates that this truly is what puts their position at risk. And I think our price action that we saw over the last month, where they wouldn't, they couldn't, for all intents and purposes, allow the price of the stock to run to any degree, especially with those delta sensitivity spikes popping up week after week as retail holds far dated calls, really indicates that it is in fact the options chain that is putting pressure on these short hedge funds to continue shorting far beyond where they would normally want to. Normally, I think they would have been fine bringing us down to 150 and crushing IV into the next cycle. But with that delta sensitivity, they couldn't relieve that FTD pressure over the rest of the quarter, because if they had, the price would have run dramatically due to that positive hedge. And so they kept shorting and shorting and shorting and shorting, and this is exactly what leads to, this process is what leads to the dip before the rip in short squeezes. This is what happened with Porsche. They tried to duck that gamma exposure for so long that it just all blew up. So if a margin call occurs, then what next? Buying. Can they post that margin, or is it too large? Do we go into a liquidation into MOAS, and then who gets margin called next or liquidated? I don't know if they'll be able to post the margin or not. If they fail to, there will be liquidation. The position will be closed. None of the standard mechanisms are in place that indicates they've covered OPEX. New rules missing exposure strongly suggest that said exposure would need to be satisfied in the coming days. Yes. Blinky Lights, thank you so much for becoming a Dillionaire, man. I appreciate it. Hit me up on the Discord and I'll get you into the country club later today.
Happy birthday, Gert. Yeah. We might have a chance, but we ain't got rope.
Do you go through your usual strategy on buying leaps? How would you enter leaps for Jamie as a fire and forget strategy? I would say that my safest entry plan for leaps would be to try to find some bid-ask arbitrage on in the money leaps lower in the chain, probably below our most recent floor. I would be waiting for the part of the cycle where we have an actual dip. I would want to confirm that dip and then enter, 10 to 20% in the money. This is for leap contracts, so giving myself like more than a year to expiry. And then, you know, I would either enter in the money or very near to the money. So within maybe a 20% up or 20% down, or 20% in the money or 20% out of the money range from the current trading price. So, you know, if we're trading like we were the other day back at like 87, you know, I would probably look at 80s, maybe 75s, and then also be looking at, you know, like 95s or like 110. So like a very tight range around the current low price action. Any new plays so I can make some money to buy Jimmy weeklies and lose it? Yeah, I'll probably have, there's a couple things I'm looking at. But with the situation the way it is in Ukraine and the uncertainty in the market, I don't know how much more rally the SPY has left. We'll do some TA on the SPY before I shut down the stream though. And that'll give us a better idea of some other possible plays. A lot of things have lost value. A lot of things are very cheap right now. But the question is the rally in the market sustained or not? If it turns, those things could continue to lose value. So it's a very risky time to enter the markets. But we'll take a look at that in a bit. That's possible. Bob's right. Yeah. It's also possible that, you know, I called FINRA again Friday and still basically got no information, as they don't apparently understand their own holiday deferment schedules. But it is possible that that 25th holiday is simply the T+2 day. So like the actual 2 day, and that Monday is the, like, that additional window, if that makes sense. So there's a lot of things that indicate that it could be this coming week as well. That's why I'm continuing to hold my options position, because there's just too many things pointing to it being pushed forward ever so slightly. Not only the rule change, but, you know, the FINRA deferment for the holidays, the massive FTD pileup that we're going to be seeing on the 1st. All of these are still in play, and so I'm still holding my position for that. What do you think will happen to price action moving forward? Sorry, hold on. Can GEX not be covered temporarily with synthetic shares? It can, but the creation and use of the synthetic shares and covering would still cause covering, right? Like we would see FTDs pile up T+2 plus 35 days from that day, but we would still see that day run. So if they use synthetic shares to cover their GACs, it's still going to cause buy pressure. And while the buy pressure may be synthetic and fail, and be realized later also as FTDs, in the moment it still causes the price to go up. Yeah, this stream is going to be available as a VOD. I'll pin it to the channel. I'll, you know, leave it. Yeah, it'll be available for people to come back and watch. So, Mister, what do you think will happen to price action moving forward if they failed, or margin calls, etc.? I mean, if there was a failure and there is a margin call, then we will see liquidation occur and probably large amounts of GameStop and other basket stocks be bought, and possibly a clearing of XRT from the threshold list. So what you're saying is I should buy the dip? Yeah, I mean, essentially, if you're looking to enter leaps, yes. If the field party has however many days to pony up capital, are the obligations from OPEC still due? Yes. Yes, they are. Why would anyone take the other side of the entropy swap for the run? Not the price fall after. Given all the information about this out there now, I just want... It's just a way to lose lots of money, right? I mean, it's possible that they are, you know, using, burning another fund in order to set up these swap positions, which is kind of why I said it's like a bit like a bust out scam. But somebody taking an entropy swap would want to be short gamma, right? Because it would protect a short position from the rise in price on their margin. And they would want to be like long volatility. So it's probable that the short position, once in you know, maybe whoever short the ETF wants, you know, that upside protection on brief moves to the positive. So somebody else can use it as a hedge, the opposing position. Are they going to create more obligations on top of those? Possibly, yeah. Before they're closed out, it'll be hard for them to if their margin's been cut off. Yeah, they were short Herbalife because they thought it was a pyramid scheme. Well, you know, that's what Ackerman came out and said, and then Icahn just bought in and burned his shorts. I mean, Herbalife is without a doubt a pyramid scheme, but it doesn't matter, right? Okay, utilization showing at 100%, Kyle Griffith, on Ortex does not necessarily mean utilization is actually at 100%. While short utilization on GameStop is high, Ortex does not have visibility over the entire SEC lending pool. So whatever Ortex can see in the lending pool is being 100% utilized. But that doesn't mean that there aren't shares outside of where they aggregate their data that are available to lend. GameStop is owned by, you know, BlackRock, Vanguard, State Street, all of these big funds. And it's also owned, you know, by smaller funds and pension plans, and all of these places all lend their shares. And so there's no way to know if what shares are being lent and how much is actually being utilized, especially not by Ortex. Their data sucks. It's just public data sold and packaged in a pretty picture. They don't have any insight that we don't already have. Shorting us down from 250 to 86, tying into all of this. You could view that as a sign of strength or a sign of desperation. I mean, based on the fact that the largest shorts during that period were directly in relation to the largest delta sensitivity spikes in that period, I would say it's desperation. Had those not been aligned to the day, then I would say that there were other causes, but they were. Is number one bearish? No, not necessarily. I mean, they still have to cover. They might have just gotten a little extra time to do it. Only Wall Street would think it makes sense that because you were assumed to be neutral, you shouldn't have to prove that you were neutral. I mean, it goes into the fact that, like, not all shorting is evil, and that, you know, exposed short positions are at a much higher degree of risk than an exposed long position, right? That's why we have transparency in short selling. So March 18 calls are within a possible margin call period. Yes. For now. If I don't see anything happen by March 1st, then I'm going to move those March 18 calls probably out to March 25th. Give it another week, and then if I don't see anything happen by then, I'm going to close and move into farther dated positions. But yeah, we are entering a period that is sort of an unknown. And so the degree of risk on short-term positions has increased. Jacob, welcome to Dillionaire. Thank you so much, man. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream, man. I've got charts.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that ain't Dirk in the go.
Sorry, I know I'm about 15 minutes behind, but it's a busy day. If the last scenario is true, shorts covered, what is the future of Pi-Fi YouTube career? I don't care. Still gonna make money. I don't think they have. The manipulation of the stock does not indicate that they're out of their short positions. If this is the process they're using to launder their short position, you know, even if those obligations are covered, there's still evidence of them in the obligations warehouse. There's still something there to blow up. If calls were to be exercised, does it put more pressure? Yes. To spread out over time or more closely exercised or at pivotal times in the cycle? I mean, the most pressure can be applied when their risk is the highest, right? Which is at the peak of the runs. If options are exercised at the peak of a run in the underlying price, that presents a great deal of risk to them because it presents a large wall of buy pressure into a period in which they would need to short. I would love to talk to anybody who wants to come on here and do an interview. I actually had a really nice talk with the guys from Macro After Dark last night. I don't know when that video will be up, but sometime soon. And that'll be going live. We discussed primarily what we've been talking about today, and you know, some other things, but yeah, I'd like to reach out. There's a former DTCC counsel that I'm gonna attempt to reach out to, and see if I can get them in for an interview. But yeah, I'll if you want to DM me, Stefan, I'd be glad to take a look at that as well. What's to stop the prime from simply assuming the short position to save their own bets? Assuming someone was called. They could. Nothing. They can continue to carry the risk. I don't see why they would want to. Sorry if this is covered. Why aren't dupes important? Dupes aren't important in the way people think they are. Dupes are important in highlighting the fact that they're using large variance positions on GameStop, but they're unimportant in their ability to affect the price of the underlying trash. So they don't have any effect on our price. They have almost no delta value. They're super far out of the money. They're simply used to hedge their volatility baskets. So they use these replicating baskets of options in order to create a delta neutral volatility or short volatility position, which is, you know, the variance swap. And And those puts are part of that strategy. They're part of the hedge for that strategy. But when they expire, they're worthless, right? They're you know, like less sub $1 contracts. They're not worth anything. And that has to do with, you know, the way IV is presented in the options chain, highest at the either end of the chain to the short and the long side, and lowest at the money. I think they call it the volatility smile, if you want to learn more about it. So if you want to be short, IV, you know, you need to hedge against long IV positions, or you need to hedge with long IV positions, or high IV. You forgot scenario 5. AMC is the play. It's definitely not. Do you think we will go back to the $80-$100 range? It depends on how high we run and if we stabilize at a higher price point in this cycle. Is there a way to estimate the size of the short position currently? No. You could just take reported short position. I mean, that's really the only thing that you could use. And that's obviously not accurate, especially given all the short positions through derivatives. Walk-in, thank you so much for becoming a Long Johnson, man. I appreciate it. What do you make of the reduced number of strikes available for this week? Only goes up to 265. If a run does occur, it puts them at a great deal of risk because their ability to hedge is limited by the breadth of the call chain. It also benefits them to run the stock now because they want to open up more higher strikes. If they plan on continuing this, they need to open up higher strikes in the call chain. They've opened up a lot towards the downside, but they need to open up strikes on the upside now. You missed a super chat. Oh. So using ETF share creation process relies on MM to print shares as they can't find more to buy without that. Yes. What do you mean? That's confusing. If it's using the ETF share creation process relies on the MM to print shares, no, it just requires the ETF creates them. It doesn't require anything on the MM side. How could they create enough shares in ETFs to cover OPEX? They haven't. I don't think OPEX is covered. Thanks, Fluid Creation Glass. We saw a lot of spreads coming in on Friday, Tammy. The options interest was extremely high, and the calls and puts being sold and bought were for June. And the interest was much higher than one would expect given the decline in the price of the stock. So there was a lot of options interest for a day that was relatively unimpressive. Didn't Credit Suisse internalize Huang's position for months? Parts of it, yeah. Until they blew up their own margin. Credit Suisse really fucked themselves with that. I wouldn't expect like JP Morgan or something to take on that kind of risk. Credit Suisse is a bit different. And you know, they blew up their like speculative side of their business doing that, dealing with the fallout from Archegos. Goivora, thank you for becoming a Cornishon, man. Would anyone who's margin called at this point post collateral? Does it make sense for them to lose more capital to continue this situation for them? I mean, they could post collateral. Yeah, obviously they want to continue the situation. It'll die another day, right? I've had some success scalping the SPY. Would a crash destroy that as a strategy? No, you can trade the SPY in a bear market or a bull market. It's one of the best. It's one of the best equities to learn to trade because of its flexibility to the up or downside. Where the SPY gets kind of shitty is in a stagnant market. When the market's flat, the SPY is a terrible thing to trade. But I mean, there's always money to be made, whether it's going up or going down. You can scalp in either direction. Scalping high risk though, especially if you're using options to do it. Given Melvin's recent fantastic investments, who do you think they will invest in next? Long Russian banks 2 weeks ago? Maybe. Thanks for all the fish, Pi-Fi. My favorite stream. Love the free learning. Thanks, Guevara. I appreciate that. So, I mean, we're entering this week with a lot of uncertainty, or a lot more uncertainty than we had before, but also, you know, equipped with more knowledge about the situation affecting GameStop than ever in the past. And I think ultimately that's good. If there's ways to make money off of this going forward, we will suss them out and we will present them to everyone always. Win Rich, little JK Rally, appreciate the stream. Thanks, Cockroach Rancher. So Moessa March is not off the table. No. Sorry if it's not. I mean, we don't know what's going to happen in the next few days, but it could be something big. Maybe Ryan Cohen was tweeting at us that there's a margin call and he is aware of it. He may be aware, you know, he may have access to futures and swaps positions that we can't see. He may have more knowledge of the situation than us. Is there any mod in here that can drop? It's the TradingView link is in the announcements channel on the Discord. Data is being changed weeks after the fact in order to game the technical indicators plus MAs plus algos. Now someone is changing data in major stock indexes. Got this from BAM. I would need to see proof of that. Do you have any new info from either Turd or Yelia, which might give insight into what we can expect in the coming weeks? Turd spent most of the weekend, I think, digging into like a T+7 clause for these failures on these contracts. I haven't heard anything from Yelia this weekend yet, but I will get in touch with her tonight. If I get any kind of update, of course, you guys will know about it as soon as I do. Would you be interested in talking to a GameStop social media guy if they'd be willing to talk? I can reach out. Yeah, absolutely. Can you briefly discuss what happens if we go back into IWM in June, assuming those obligations may be in the OW? That's a good question. I don't know how effective this strategy was when we were heavily balanced in ETFs. BlackRock and Vanguard ETFs don't seem to be so complicit with this creation process as XRT does. And if we slide back down into the Russell 2K, GameStop's weighting in ETFs is going to shoot up, which means large institutional buying would occur. kind of the opposite of last June, right? But to the upside. As far as the obligations in the OW, I'm not sure that, you know, those wouldn't have been cleared out already. And I think that's part of the reason we still track with the Russell 2000 and with IWM fails, is that there are obligations still due there. Love you, dude. Keep it up. Thanks, NW. Oh yeah, it's absolutely bad if MMs are exploiting it, but you know, they don't have to report that. And I mean, it's not that MMs aren't allowed to speculate. They are, but by speculating, they create large amounts of risk in their own positions, right? Because their position is to be neutral. And so anytime they diverge from that neutral position, they're accumulating lots of risk. Thanks, Modern Renovator. Thank you, Paul. Looking at the data collectively, seems that we have entered a window of high probability for even more upside, violent upside. Am I missing something? Was them failing the thing we wanted? I mean, like I want it to be true, but it's unpredictable, and I don't like that. Like I like to know what's happening, and we always, I mean, we kind of always knew that if a fail occurred, and when it happened, we would be in the dark. And I see us being in the dark, and I see that as a reason to indicate that a failure has happened. But the certainty moving through this period is definitely diminished. I'm not gonna write you a love letter, but I appreciate you always answering my questions in a thorough way that gives me enough info to do my own research and without condescension. Thanks, Trash. I mean, you like the condescension too, but who OCC CBOE decides what strikes are going to be open? I believe CBOE, but it could, you know what? It's probably OCC. OCC sets the scheduling, and I believe they determine what strikes are open based on. And the market makers can open strikes also, as long as there's a reason for them to. Well, the problem is they can't do it the same day. They have to do it overnight. And so if the stock runs violently in one day and that options chain gets left behind, right? All of a sudden those variance positions can start to explode because they have no way of hedging forward on the volatile price action. Once the chain's in the money, shit gets real crazy. I mean, that's kind of how you get that Volga-Vana squeeze like we saw last January, is that the price of the stock ran well beyond the chain, and there's no hedge at that point, right? They have to buy further and further dated calls, which starts to drive up that insane volume like we saw last year. You know, everyone thinks GameStop shares were what was trading that created that massive volume, but that was that Volga-Vana squeeze going on in the background, that repeated hedging of those replicating baskets, as they tried to get out ahead of that massive increase in implied volatility. I don't know if Citadel has Russian holdings. If OPEX is you can go look at their 13F if you want. If OPEX is a MM responsibility, why would short hedge funds MC lead to OPEX failure? Would that require a MM to be called? It's the AP. The AP can be responsible. So those contracts are closed. If the AP is not delivering that cash to the ETF, and the ETF's not closing those forwards, you know, now all of a sudden you have this vacuum of debt. It's the MM's responsibility as well. Whoever took the counter, like whoever was the counterparty to those swaps. But those contracts are, you know, sold. They're sold contracts. So the short hedge fund is the MM for those contracts. Those are sold puts. Inverse Melvin's investments. Probably better than buying what Kramer says. Why is Friday's stream private? I'm not sure. I'll have to look. Sometimes if I get like a copyright thing or something, it'll take it down until I repost it. Did I play any music or anything on Friday? Maybe. I'll take a look though. What's up, Iron Porter? Yeah, it could be with the loss of such a large sector of the global economy, due to the sanctions placed on Russia. I mean, it may be that they were given more time to stabilize their positions. There's no way to tie all that together, though. We would not know. You know, if you don't want to answer, did you comment? I did. It was the first thing I commented on. Tendy Baron. This is at the beginning of the stream. What are your thoughts on Jimmy oscillating back to 103, 97, 87 before we go back up? The DMI on the daily doesn't seem too strong. Let me check it out. I mean, we're either moving into a bounce. I would say that this looks like a bounce, and similar to previous bounces, if you look at, you know, like October into November 3rd here, or the, you know, August, we had this crossover, this brief crossover before we took off. So you know, this could be that low, that final dip before we move. It's hard to pinpoint because it's not on the exact time period that we would expect, but if we go back here and, you know, look at August 24th, you know, we see this low crossover occur and the trend dip similar to what we're seeing now, before our breakout. So it actually doesn't look bad as far as historically, but the trend is weakening. So even if this is a negative trend, it's losing steam. This isn't like a building negative trend right now. Until we saw ADX pick up on the daily, I would just assume that this is a short-term reversal period. I do like the condensation, but I definitely appreciate you also catering to the part of my brain that likes to learn things instead of just the part that acts as comic relief. No problem, man. I don't want to interrupt the GME stuff, way more important. So if you have time now or later, could you look at MOS 50C? Mosaic Company? And you have 50 C's. It looks strong. I don't know how much of this is just correlated with market movement, but it looks kind of like it is. Current closed at 49.53, and you have March 1850s. Does this have a previous high? Jesus, he's so many years ago though. I mean, whatever changed sentiment here in March has led to pretty continuous growth. I would be wary of like 52.50 as a historic high, but you know, it's out of resistance now at 50. I guess you'll have to see how it plays out over the next couple days. The trend looks good though. Volume's increasing. Take a look at MACD is probably already positive. The uptrend is decreasing a little bit, but I mean, it looks like it could still make a nice, like, or continued positive move for a little while. The divergence is very good. So it may not get a lot more steam, but you know, I think a break of 50 is definitely possible. Just be wary of push higher than that. You know, protect yourself, set a risk tolerance on that, like an out. Figure out where you want to close. 7 words hedges never want to hear. The chain is now in the money. Consider the fact that you don't believe the dupes have any effect on price action considering their low delta value. What makes you still look for March 1st? Because January 21st leaps expired and the gamma exposure from them was likely covered synthetically, which creates FTDs. People tie that into the dupes, but that's wrong. It's the same date. It's just that the dupes aren't what causes the effect. So it's not that March 1st is wrong. It's just that March 1st is something else. It's not just the dupes. It's also the entering of new variance positions for next year. So all the hedging that synthetically occurred for the entering of volatility swaps for next year occurred on January 21st. So we started to see the OI increase on Jan 2023 deep in the money puts. So it's just a, while it still works, it's a misunderstanding of the, I think, of the things at play there. Friday may have been when you were playing the video clip for the shills on stream. Oh, maybe. Our little run to 224 was T plus 9 plus 35 C from the 167 run. Are you thinking that's why we ran rather than OPEX? Yeah, I think it just looked like heavy FTD settlement, honestly. And I think that's just like why we slightly outperformed the SPY. The following day was just shorting. Friday on the 25th was just, they shorted the shit out of us. We should have just run, like, if they weren't doing anything or just covering a small amount of FTDs, we should have just, you know, like floated up with the SPY. Do you think the new rules were set as an attempt to keep the domino effect of one margin call to go systemic? How we've thought MOAS would go down? I mean, yeah, absolutely. Most of the rule changes in the last year have been in order to prevent like systemic risk from the failure of one party. And it's possible if their total return swaps that were entered last year are now due. If they entered a 1 year, like a 1 year contract, this could be due now. Or have to be rolled now. This is on the wrong time frame. No, that's right. But I will have to adjust this moving forward. Again, I said this in the beginning. It's very hard to tell where this phase C ends. And the price action from this week looks just sort of like a repeat of the price action from the previous week, as we had this spring test, another test here. And so it's possible that our accumulation period is just continuing. But I still think that this stands, that we are in an accumulation period. And I'll adjust that today and post the updated chart in the Discord. If the stock is frozen and calls are in the money, they're gone. No trading occurs on a stock that's frozen. I don't know why you would hold a call contract all the way up to $1,000, but if you did, like, you could just exercise long before that. Our current price is like 100. I doubt very many people have calls outside of 300. If we went to 600, the cashless exercise on those calls is, or sell to exercise on those calls is nets a huge number of shares. I don't see any reason to continue to carry contracts up past $1,000 when they could just be exercised and turned into stock. Jedward. But if you're holding a contract and they freeze the stock, that contract will die worthless. Do you have an expected FTDs from March? I think Bob was talking about like 28 million, something like that. Total FTDs due. I think that's between ETFs and GME. Obviously, the number affecting GME directly could be lower. In light of that, does it seem like 1.6 was XRT thresholding covering? I know you've mentioned that before, but 224 feels like further evidence. I think so. I think they might have let some pressure off XRT right before it was thresholded, because it was thresholded the following morning. So on the 6th, that after hours run, that may have been them just closing some puts and cash settling early in the cycle. That's what it looks like most to me. And also possibly what we saw on November 3rd, right? Was them just kind of like a pressure release valve in the middle of the cycle, clearing up some of those obligations so they can continue the process. But with thresholding, sorry, throat's really dry. With the risk of threshold looming, it makes sense for them to do that the following day on 1/7. So possibly tens of millions of GEX FTDs March 1st. If this is the case, we're possibly going back to 300. I don't think we move up to 300 unless they're closing out like swaps, unless those swap counterparties are buying in. And I think that's when we see those big runs and that continued upward pressure. It's possible that, yeah, I mean, options interest on GameStop is still extremely high. That 3-to-1 ratio did not really encompass this Friday. So our put call ratio is still very delta favored. So I still think that the risk for them running the stock is present. What are your thoughts on a potential DDS squeeze as well as its potential to strain managing GME's position? It puts strain on the ETF primarily. If any of the basket stocks squeeze, right, it puts an undue amount of strain on the ETFs. And yeah, that could then potentiate further squeezes as like a chain reaction. Massachusetts mad at Fidelity for giving poors options access, and yet their state lottery took in 1.5 billion this year is funny to me. It really is. I mean, even some of the worst options contracts have better odds than a scratch off. EU approves banning all transactions with Russian central banks. Banks run starting in Russia. What could this mean for our market? I mean, we could see capital move. The US is also a large oil producer. I don't think those sanctions are going to be bad for us. Might be bad for individual entities participating in the markets, but probably not bad for the US economy overall. So stock market about to become short squeeze central. I mean, that's kind of like what high risk in the VIX produces anyway. Is just like, and yeah, I mean, we've been seeing it for the last year with all the liquidity flowing in, just stocks squeezing all over the place. It's been a weird year already. It's been weird since fucking March of 2020. Houston noticed you were in his chat on Friday. He sent an invite to you. Yeah, I know. I fell asleep. Could you explain the ETF chain reaction briefly that would theoretically happen if one of these basket stocks squeezed? I mean, yeah, the value of that stock and the underlying ETF would go up. I mean, actually, the SEC describes the process really well with what happened with GameStop and XRT last year in their report. And that the ETF has to constantly play catch up to, maintain its NAV as the price of the underlying stocks rises. Is it theoretically possible to buy cheaper options on other basket stocks to put more pressure on the hedge funds? Theoretically, but it would have to be done in such extreme quantities that it's not really a strategy that's possible for retail. If I could get some sleep now that you're not arguing with trolls on Super Stonk all night, maybe. I'm looking forward to the prospect of that. I hate your weeklies, Discord, and others theorizing about them failing OPEX on purpose to give them more time to hedge on a less risky time. Thoughts? Can they, while having sufficient funds? Can they intentionally fail while having sufficient funds? Sure. They could take a margin call in order to give themselves a slight delay. It's possible. If that's what you're asking. I'm not sure. Your question's kind of all over the place. Did you already do TA on the spot? No, not yet. You're going to ask some of the other submods about cross-posting there too, like Jungle, DD into GME. I mean, I could post on DD into GME already, or r/GME. Jungle, I don't know. Pink reached out to me like a long time ago about something about options and bots, and that subreddit gets a little too tinfoil for me, I think. I never really got back to her. I was just busy and I didn't want to deal with it. Donation for 510 weeklies. Thanks for all you do. Stay strong. Thanks, Hacksaw. Is there a list of what is theorized to be in the basket somewhere for reference? You can just look at XRT's holdings. Those are all in it. I'm also not even a little sorry about getting you banned. Yeah, I don't even know how. I'm not even going to get into it. I think the mods should present evidence of me telling people to upvote my posts. Because otherwise, all I'm doing is sharing links. And I'm not even sharing links to my posts. I've just been sharing links to my own fucking profile where posts can be found. But they won't because there isn't. Glad to see you're in good spirits despite the super stupids drama. Yeah, I'm fine. I expected them to ban me long before now for, you know, no reason. You already know this, but any community you decide to post your daily TAs in will grow extremely fast. So maybe consider starting your own Reddit sub to avoid backstabbery in the future. Possibly. It's us pesky mods with our vote brigading. You're not even a fucking mod, trash. Give me a trash Dan. This is an enamel pin when you launch your merch store. Thanks, Fluffy. I think the ban is a blessing in disguise. It allows more learning about selling options, covered calls, puts, etc. I agree. I agree. It's freeing in a way, and I no longer have to. I no longer have to think about, you know, the sentiment of the community when addressing facts, and I don't have to. I don't have to like, you know, apply that discretion to my research. Love how we brigaded a community we've always been a part of. Yeah. That's a while ago, but you probably overread it. Any thoughts on factor certificates? I'm looking at them for VIX plays, for example, because of Europora, I have these available. I have no idea what the fuck that is. I'm not that well versed in European derivatives, Biter. You're not becoming an admin, trash. Can you quickly explain why they can cover Jan Leap's FTDs under T+2 plus 35C and not do the same for Feb OPEX? Is it because Feb OPEX is for ETF GEX? Oh, Jesus Christ. Okay, yes. So GEX can be covered with synthetics, right? But it's still covered, Ryan. So if I have GEX due, right, and I use ETF creation to satisfy that, I'm still covering in the T+2 window from that gamma exposure. The FTDs from that are then, from this covering that has already occurred, are then kicked out T+2 plus 35 days. Well, just plus 35 days, really, because this was already covered. So if I'm using synthetic share creation to satisfy GEX, then that will create FTDs that then must be satisfied later. But the GEX is still satisfied on the open market. DRS doesn't make it easier to control volatility. It just simply increases the amount of volatility. It makes it easier to control price. Win magnificent calves. At any point, does Ken's fortune get involved in this entire process? Probably not, no. I made the remaining T-gens here. Won't need the discretion of facts. We can handle it raw, dog. Yeah, no problem. Did that make sense to you, Brian? I want to make sure everyone understands how leaps can both create GEX, and so they dodged the GEX on leaps, right? They shorted it under, and then whatever exposure there was, you know, was covered, and then the FTDs from that exposure will exist in 35 days. But essentially, they shorted under the gamma exposure for that period. So if FTDs came off of, you know, whatever synthetics were needed to be created to short it into that period, then those will be due. But as far as actually covering exposed gamma, it happens in T+2. And that's what's so concerning about this week, is it has not happened. Okay, cool. What percent odds do you think there are for violent upside in the next 1 to 2 weeks? I don't know about percent odds, but I think there's a very good chance that we see some. I think not only are we well positioned price wise and volatility wise, and from a technical aspect, but I also think that there are obligations due that have yet to be covered. Yeah, our potential for a MOAS situation is better than ever, but our knowledge of how that situation plays out is limited. It is obscured, which I don't like, right? as a trader, I like to at least have an idea of what's happening. Are we looking for volume or price action this week? We'd be looking for price action. Volume would be nice too. I'd like to have both. But why? What's the advantage? Now that you've left SS, can you admit that that's a cannabis vape? It's not. I still don't like weed. All right, I did want to do a quick run over of the SPY, and then like whatever pickles picks I have for this week, I will have up in Dillionaires later today. So let's check out the 4-hour here. We have a nice bounce, and a return to that 152 level would be ideal. I believe it's here at 152.32. Was that next resistance to the upside? You know, after the breakdown due to the situation in Ukraine, we've made up all of that ground. We've continued to surge up. I think we're going to continue to see growth in the SPY, but remember that, you know, our level of where we're likely to see bearish divergence from this trend is going to be up here, or at least strong resistance. The downside is around 426. If we do break through 452, another test of 460 is possible. F? Oh, dumb. There we go. Another test of 460 is possible. If we got here to the daily, I want to take a look at the MACD. So MACD still hasn't reversed, but it looks like it's moving into a positive crossover. If it does, then, you know, there's a pretty good chance that the SPY is at least going to continue up to this point, and then, you know, we'll be looking for resistance there. I would say long, slightly far dated positions on the SPY currently are in are pretty good, maybe around like 440. With like maybe a week of expiry, just to play that test of the upside. But remember that this, because of the political scenario right now, this could just reverse at any time. And so playing positions on the SPY is risky. Be warned about that. And we're gonna see other things gaining value as well as the SPY picks up. A lot of the value lost in these like FANG stocks and things like that is going to come back. Similar to the dip in 2018, 2019. Are you talking about Volmageddon? No, not similar to that. Volmageddon was a totally different story. But you know, as far as this small correction goes, there is a lot of room for it to continue correcting to the upside. I don't think we'll hit all-time highs anytime soon, but I think it's going to continue to move up, especially with, you know, money being repositioned and, you know, sector shift. Money's going to flow back into new assets as well. So we'll be keeping an eye on that and what gains advantage out of this situation in Russia, and looking for, you know, some idiosyncratic upside. But right now, yeah, it looks like the SPY has about a $12 range to the upside that could be very profitable. I'm playing it currently. I don't recommend that other people do, obviously, but it's something to look at and consider. SPY risk, same like GME risk. No. Could you do a quick cat chart as well? Yeah, cat's kind of in a weird situation. I know a lot of you guys have been following this along with me recently. So I bought some more on that bounce. And it still hasn't broken back into its previous channel, which is, try to draw that for you guys. But it still looks very good for a bounce. So I bought here fairly close to there. I think I bought at like 183, so I didn't quite hit the bottom. And it's still a decent entry for 195s, which are about right here, or 190s if you really want to try to play it safe. Remember, the risk is down here below 180. But yeah, I'll be looking to see this bounce at least continue to the upside, possibly 202, 203. That seems to be where most of our reversals occur. It may continue to surge up higher though, as interest in, you know, Dow stocks picks up over the next couple weeks. Make sure that if you are looking into CAT as a short-term investment, that you're buying yourself plenty of theta on those contracts. It's a very slow moving stock and it eats up theta quickly. So weeklies, bi-weeklies are very, very risky. It can chop for quite some time. I mean, this run here, you know, took a couple weeks to be realized. This one as well, from this dip up to the peak here. So you don't want anything short term. And then, you know, continue to remember that there is risk to the downside here. Could you look at Express, please? I mean, similar situation to GameStop, right? Not very different. Looks like it's due for a run. This is a good target for the short hedge funds to do a position flip, similar to what they did on AMC. So, and this would be the time for them to do it. This is almost a cup and handle and very stabilized. So yeah, I could see Express moving up to 8, maybe even higher. It's an interesting entry and cheap. Ah, man, my throat is dry. We can't go up because of war. I think they make engines for the U.S. for the armed forces. So yes, they can. They also have tons of government contracts. One last request for today. Can you yell at us all for buying weeklies on GME? Don't do that. Even if you get burned on your far dated contracts, they hold value that you can then roll forward. offsetting any losses for mistiming runs in the near term. Weeklies on GME can lose all of their value very quickly. I am dying right now. All right. Thank you guys all so much for tuning in, and thank you for staying with me. I appreciate it more than I can explain. It means a lot that I've been able to create. Not even I've been able to create, that you guys have been able to create this community built around further investigating what's going on with GameStop and knowing more about the markets and understanding them. I'm unbelievably proud of you all. Your resilience in the face of the abuse and attacks that have come our way in the last several months has given me the strength to resist them as well. And I thank you all for it. Have a good night, and I'll see you tomorrow morning.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult.
Sit, Krian, sit. Good dog. Not an advisor. Frigulon.